Hi, this is Brian Carlton for ABN Newswire. In the midst of what the IMF is now describing as the Great Recession, China is increasingly seen as vital to Australia staving off the worst effects of the global economic downturn. But can China effectively stimulate its domestic economy to produce industrial and consumer demand levels high enough to keep Australia in the black? It's just one of the uncertainties among many, so the value of good street-level information can't be underestimated. Stephen Joske is Beijing-based and runs the new China forecasting service for the Economist Intelligence Unit. Prior to that, he was the senior Australian Treasury official in China, and he worked for a number of years as the senior advisor on macroeconomic policy to the former Australian Treasurer, Peter Costello. Stephen's heading back to Sydney to share his vast knowledge at the China-Australia Business Congress in Sydney on the 19th and 20th of May. Stephen Joske joins me on the line from Beijing now. Stephen, welcome to ABN Newswire.
Good morning.
There's much speculation that China's continued economic growth is Australia's last best hope to stave off recession. Is it that simple?
Not entirely. I mean, China will be China's recovery will certainly be very positive, but it won't solve Australia's problems. I mean, the commodity price downturn is a global phenomenon. Obviously, Europe and the US are still major markets, and Australia still has issues of risk in the financial sector, which is largely a domestic issue to work through. But a Chinese recovery, which we're expecting to emerge in the second half of this year, will clearly be a big positive.
Will that be the focus of your address to the China-Australia Business Congress '09?
That's right. We just want to get across the message about what's driving the Chinese downturn. And once again, the key things are that it's been heavily, just like Australia, it's been heavily driven by domestic factors within China, and then we had the global crisis coming on top of that. But the good news is that those domestic factors in China that caused the slowdown, which is primarily in the real estate and construction sector, are likely to turn around in the third and fourth quarters of 2009.
So have we yet to see the full knock-on effects of dwindling consumer demand in the West on the Chinese economy?
No, that'll certainly have a significant effect throughout this year. But the key point is that China's not an export-led economy in the sense that the key driver of growth is domestic investment, not net exports. And within domestic investment, the key thing we're watching now is the construction and real estate part of investment. Has
Beijing done enough so far in the right areas to drive up that domestic economic activity or at least stabilise it?
Basically, yes. I mean, the economy hasn't fully stabilised, but there have been some initial positive signs in the last few months. But they have done the right policy measures in terms of a very big stimulus package has been announced. We're not sure exactly how much they can implement, but it's certainly going to be very large. But more importantly, they've loosened the controls on bank lending, and they've also reversed some of the policy measures that were aimed at tightening up the construction sector.
So when do you see the China growth rate bottoming out?
Certainly 2009 will be the weak year, and we're expecting, on a quarterly basis, we're expecting the third quarter will probably be the bottom.
How important do you think it will be for Australia to capture its share of investment dollars flowing out of China as we move forward?
It's certainly a major issue. I mean, regardless of what happens in the short term, in the long term, China's going to be an increasingly big gross investor overseas. And just as we saw Japan and Korea engaging in major purchases in the Australian resource sector, China will obviously have an interest in doing likewise.
So what would you see as the major opportunity, business opportunity, for those who register for the China-Australia Business Congress '09?
An incredibly broad range. You know, the simple part that stands out is, China's, the major centre of growth globally in 2009. So to the extent you can tap into that market, you'll be getting better results than elsewhere. And we're also seeing that the Chinese recovery will have the key thing that Australian businesses need to focus on is for the long term is the Chinese domestic services sector. We're obviously going to be big exporters right across the commodities side, but if you're looking for long-term growth, it's probably going to come from the service sector for marketing directly to Chinese.
And given the nature of China, it would be a very useful thing for anybody wishing to do successful business there to go to www.acevents.com.au/ChinaBusiness09 to register.
That's right. It'll certainly give a very good overview of exactly what's happening. And as I said, it's not quite the picture that people often understand. I mean, it's not an export-led economy, and it's primarily a domestically driven economy, and you need to focus on where those domestic opportunities are and how Australia can tap into them.
Stephen Joske, head of the Economist Intelligence Units China Forecasting Service. Thanks for your time and safe travelling to the Congress.
Thanks very much.
This is Brian Carlton for ABN Newswire.